Well, Treasury bond futures take a breather today after Wednesday's sizable post CPI sell off. Today's news and data flow, at least in the morning, was textbook negative, and it tended to cap the bounce back in futures ever so slightly. Really starting with we saw German yields reach 23-month highs in the early going. That is part and parcel of comments made by ECB council member DeCoste, who said he was favoring a faster pace of inflation as part of policy for the ECB. We go on to our shores, same thing with data, really net negative, but didn't do a whole lot for the narrative. Initial claims of 14-month lows. April PPI final beats expectations by quite a bit. April's PPI ex food and energy rose at a record 4.1% year over year. Again, most of this was net negative for futures prices, and it did tend to cap the bounce back ever so slightly. Going into the actual session, the trading session into the afternoon, break-even inflation expectations fall a little bit off of Wednesday's 8-year high. That gave some confidence to futures. But the big event for the long bond was $27 billion 30-year Treasury auction that all eyes were on. So it came out on the soft side, moderately so, with a tail of 1.6. Futures did initially move lower on the auction or post-auction results, but nothing out of the ordinary. And also, if you keep in mind, we're seeing stability in stocks in the dollar today, and that's really helping us stay in range with the 30-year. Looking on to CME Group CBOL, the whole curve in June on a 1-month basis, it's at 80th percentile. 3-month basis, it's actually on the low side at 20th percentile. Both variances, both call and put variances are up, although call is up more than the put, so that would make implied skew higher on the session. Also, at the money vols up ever so slightly. Looking at option volume, seems to be clustered around the 156 and 157 call strikes. Also, big volume in the 155 and 156 put.